journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, we have as our guest today Bob Miner of DT Reports, Dynamic Traders. Bob, how are you doing today?
Oh, just dandy.
Well, you were on about a month ago and you were talking about a potential top in the gold market, and that certainly came to pass. And you want to tell us what you're looking at now, Bob?
Yeah. Do you have those charts I sent you?
Yes, sir.
Yeah,
they can.
Listeners can be able to view them?
Everybody can see them. They're spot on, ready to go.
Yeah, the weekly gold chart, what it's basically telling us is possibility or two sideways to down, but any decline should be a correction in a much higher time frame, a bull trend. So any decline, what I do is I just look for opportunity to identify if it's in a position for a correction, and if it is, and that's a go long opportunity. So we got the momentum cycle is close to oversold. We've got some time cycles here coming up in next week or so, and it just all looks very positive for the longer term.
Okay, well, that looks pretty good. Now, do you want me to go to the next chart?
Yeah, well, let's do that. Is that the gold daily chart?
This is the gold daily. Yep. Oh, that's even clearer. Oh, my goodness.
Yeah, it's just the biggest thing to keep in mind is that the higher trend should be bullish. Any decline should be correction. So there's one key price level that anyone who looks to trade gold should be aware of. First close on the August chart is 2146.60. As long as gold has not made a daily close below 2146.60, you should be looking for buy opportunities at any point that it looks like it's making a daily low or something along those lines. Right now, it looks like in 3 or 4 days, we may have another opportunity.
Okay, it sure does. Now, Bob, you have a circle there over June 25th. Is that a cycle date that you're expecting something important to happen?
It's a high probability for a weekly low, so the market could be sideways down to that. And it's not an exact level. It's like anything, you look a little before, a little bit after. I would say any time in the next week to begin looking for potential for a low and a resumption of the trend. And that's not necessarily it's going to the moon. It just means it's a bullish bias once that reversal is made.
So you're not going to tell us the exact time of the day on June 25th? We have to wait for that?
Oh, it'll probably be around 11:15.
Oh, there you go. Write that down.
Yeah.
You know, the way things are going, Bob, you probably hit it spot on because you've been pretty hot for the past 25 years. Let's take a look at the next one, and that is the S&P, which continues to go higher and higher. I just noticed the NASDAQ just made new highs just a minute ago, so just never stops going up.
Well, it will sometime, but
yes, maybe not in our lifetime.
Yeah, we're looking at the daily chart of the S&P closes. That's a couple days old. But I always look at what's the main factor to be aware of. I think the main factor is in an election year, the time between around spring into late summer has a bullish bias. It doesn't mean it goes straight up through that time. So I'm looking at the S&P now, and it looks like it's about to make a top that may last a couple, 3 weeks or so. But more than likely, any decline will be a correction because we have this bullish bias into September. So I would, I think we've got a top coming in this week, good possibility. And sideways to down for a couple, 3 weeks or so, but then it should resume the trend. Interesting piece of information, if we break down this election cycle, is that September 20th, which is the actual last day of summer, has been above the May low 100% of the time for an election year since 1952, an election year that had a positive first quarter. So even if we have a decline, keep in mind that decline is probably a correction, and there'll probably be a recovery before the end of the summer.
Okay, now we've got, I believe, one more to go. Is that correct? No, two more.
I've kind of put the two of them together. I kind of put the daily and then the election years, average years with a positive first quarter. That's just in general to keep alert that between around mid-May into the end of September, there's a positive bias. So any declines are likely to be recovered by the end of the summer.
Okay, that looks pretty good. Now, the next one, this is right from your book, right, on election cycles, and we're going to talk about that next, I believe.
Well, we kind of covered it, but we can talk about it in more detail. Yeah, that's the cover of the newest book. I'm assuming that's what you're referring to.
Yes, sir. This is a great book, by the way.
Cycle and stock market trends.
Well, everybody's talked about it, but you put it in biblical form here, man. It just one right after another. You've covered them all. So this is anybody that's interested in cycles really ought to take a look at this book because you've done a lot of research, and you've done a great job, Bob. So, and not only that, but you take it out through 2027, so people can follow it as it goes on. How do they get a hold of the book, Bob? Amazon, or what is the best way?
Yeah, just Amazon, Amazon.com. It's in physical paperback or in Kindle, either way.
Okay, that's great. Well, listen, we're going to have you on again soon, so thank you for joining us today, and we'll have you again just whenever you want to speak to us, Bob, about something special. Just pick up the horn and let me know, and we'll make room for you because we like to hear what you have to say.
Fantastic. Talk to you next time.
You bet. Bob Miner, folks, Dynamic Trader. The book is The Definitive Guide to the U.S. Election Cycle and Stock Market Trends. And if you like cycles, this is one good book. Okay, now let's get back to some of the other things. We just had some type of action going on here because we had a new high in the NASDAQ just a second ago, as I recall. I'll show it to you in just a minute, but this is what we were showing today. Those of you that belong to the 24/7 and the program that we have here at TFNN, we've been short this for a very, very long time, and we added to the short right here on the 7th. That was that big hourly ABCD that was just so perfect. It was just a Gartley pattern that you just have a textbook about. It came in exactly at the number right here at 39,166. The high was 31,177. And today, folks, right hit this old Fibonacci number. If you like that kind of stuff, guess what this is, folks? A, B, C, D. God, I wish Mark was here today. I could hear him in the background. AB equals CD. Hold on. And there it is right there. And I, believe it or not, I believe in these numbers quite a bit. So what I decided to do, I said, I better be covering shorts here because this is what you're supposed to do. I didn't go long, and I'm still kicking myself in the kabuki for doing that. But I was smart enough to at least cover that. As a matter of fact, someone says, I don't believe you. Well, let's see if we can show you what we had here. And you'll be able to show you where we at here. Get here. And this is right here. There it is, right there. There it is. There's a profit for the day right there out of the YM. And that's what we're watching. Anyway, we'll be right back. Stay tuned, folks. We'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I put up the chart of the NASDAQ here on a 30-minute basis so we can see the last 3 days. And as you can see here, we've completed the smaller ABCD pattern right here. We still have the larger one. There's the old high right back here. And you can see we almost made a new high in the NASDAQ, just a few points away. That's at 91.45, but that'll most probably be taken out without too much trouble. But folks, the number of times I trade the NASDAQ, you can count on one hand. And that's even if you're missing like 20 and missing 2 fingers. I hardly ever trade it because it's just herky-jerky. These others are so perfect in numbers that it's just, you just can't. I know I've done this so many times. We'll do it again just for the heck of it, okay? Here is the S&P, all right? Now, this is a 4-hour chart. Now, we're going to look at this during this time frame right here. So we're going to take this and we're going to go up here to a 60-minute chart. All right, and there's our 60-minute chart. We're going to move it over here, okay? And there was our bottom that we were looking at. There was your 61% retracement right here. There was the ABCD, 30 points apart. So I'm just going to take this off. Now look at that. Now we had after that bottom was in, we had a huge rally, didn't we, folks? Okay, so all I did was I went back and I wanted to see what that rally was going to end up at. So all I did was I went back and I looked at this high right here, and I took it down to the low right there, just like you're supposed to do. And look what you see right here. That's the hourly. Now, if you take this down to an 8-minute chart, you'll be able to see all the bars leading up to that spot. And there it is right there. So, and now we've had a big move. The S&P got back up here. The NASDAQ is way up here. And we're still bouncing around here. I still think we're getting ready to go a lot lower in this thing. But, I'm just trying to show you that, boy, when these numbers come up, should pay attention to him because they don't work all the time. But the guy from Oregon State, boy, he ought to pay attention to him because I have never seen that. And I love baseball. I've been watching it since I was 3 years old, 4 years old. And I watched it a lot. And these College World Series is just incredible games. But to see a manager, I just shook my head. I said, and I knew what was going to happen. If I could make book that this guy had never hit but one home run. He's only a freshman, but he was in 36 different games. He only hit one home run, except for the one last night, or night before last. and that was a grand slam, and that iced it for Texas A&M, and now they're in the College World Series. So very exciting to watch these young men play. Some of these will be into the major leagues, and boy, they are good enough, because my goodness, it's really spectacular what they can do. Now let's move on. We'll get rid of this NASDAQ. We're not interested in that anymore. We've got one that is really super interesting today here, folks. I don't know if it's going to work or not, but we're going to pull it up here because we've been talking about silver for quite a long time. And I want to bring this up to show you today because we hit something really interesting in the old silver. Let's get this up here. Where are you, silver? Silver starts with an S, right? It sure does, Larry. Where are you? Oh, here it is down here. Right after the S's. Here's the S, and we're going to put an hourly chart up. I'll do a half hour. Okay, here's a half hour chart in silver. And as you can see here, we have a big ABCD forming here from just a couple days ago. Let's just get it up here. There it is right there. There's your A leg. There's your B leg. There's your C leg. We're going to draw it in right here. There's AB. That didn't draw right. 1 second. Hold on. This thing is so sensitive. There it goes. There's your AB. Okay. There's your CD. And there it is right there. It was $29.18. $29.18. The low was $29.18. So it's made a low here, hasn't gone anywhere, but that could be a major ABCD in here. The last rally we had here after this, you remember these, we've talked about this on the daily before because this is the one where we had the really big sell signal in this. We'll move this over here. This is the 4-hour chart when we were way up here just the other day, and our big sell signal was right here. We had that perfect 135 pattern, just everything just lined up just absolutely perfectly here. There's your 1, there's your 3, there's your 5, and then down she came, and now we're setting it maybe pretty good support. Let's look at this. This might be a 618. Then you have to pay really. No, it's below the 50%, so there's not much you can do about that. So that's pretty much it. Now, on Friday, we are going to have the live trading, plus we have, guess what, folks, a crop report due. The World Agricultural Supply Demand Report is coming out, and we've been had some pretty good trades earlier in the late May and everything, but the last trade we did in the soybean oil, let's just get this up here so we can see it because it's still hanging in there but still going down, so you can't really do much with it. We'll put the daily up here and remind ourselves, we bought it on this one right here. We were stopped out right there. Then the market rallied up and look, it made new lows here. We're almost ready to take these lows out. So I'm looking for a place to get long. What I would be looking for is a movement down into this area here. If there's a really bad report, you could get a 1.27 expansion down here on the soybean oil. And believe me, folks, people are not going to stop using cooking oil. There's just that's just not going to happen. So that's one of the things we're looking at. Plus, we're looking at the soybean complex itself. It's acting relatively good, but it still appears that we'll start out with the meal here because this is the one we need to pay attention to. You see it's down so far today. Just get this up here. This is just a 13-minute. I'm doing that because I was long the meal, and we had a nice ABCD pattern in that. I pointed that out the other day. There was the ABCD move, went right up to this level. We made a little bit higher high here, and then it's been down all along here, and that's what I was looking at today. I got very busy with all the other stuff that I was looking at today, and I missed this beautiful 382 pattern here in the meal. This is the kind of trade that I'd be doing Friday for sure, because there's your 382, beautiful, stopped exactly where it is. And you know what that's telling us, right, folks? Yes, Mark, I can hear your words behind me. There's AB, and there's CD, and there's 1.6018. That's only $1.50 away from where we are right now, so got to pay close attention to that one. Very, very interesting, okay? Now, let's take them. Oh, we've got a break coming up here, I believe. Let me check the clock on the wall here and see how much time we go. Oh, a minute and 20 seconds. That's a lifetime. Let's take a look at the crude oil complex here. I believe I got it here somewhere. I had it in here today, but who knows where it is. And there it is right there. Let's just get this up here, put the 13-minute on it because we can see where we've been and where we're going. You remember yesterday we were talking about this number here at 78.23, and you'll bring this up here. You'll be able to see it. There's where we were yesterday, 78.23. It came down, stopped here, and made another new high right up in this area right here. So right now, it looks like there could be a pretty good bullish bias to the possible crude oil. Now, this is just over a past few hours, but it's got something in this chart that you have to pay attention to if you look at charts the way we try to look at them. Okay, so we know that we've got a big move here. Rallies over $1 a barrel. That's a $1,300 move, and then it backs off almost an hour. Let's see where it stopped at. Put your card up there, Johnny. Wake up over there, young man. Hold on just a second. Within 2 pips of the exact 382, folks. You can't make this up, can you? Let's take a little break. 877-927-6648. Stay tuned for Treasury bonds and the foreign currencies.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we're going to take a look at the gold market. This is all day's action today from the early in the morning to where we are right now. You can see we had an ABCD pattern right here from the low that we had down here at 23.14. You'll notice there's your ABCD leg coming in right at the 61% retracement. But if you took this just a little bit farther, what we'll do is we'll go to a 13-minute chart. And then we'll see, this is what we do for Friday, and you'll be able to see where we were setting almost exactly at the 382 of this whole move right back here, within $1. So that's where it's in. It looks like a relatively good buy, friendly hello and a good buy. But anyway, your risk here was extremely small, 61%. Let's just draw that in so you can see it. There's your 61% off of that leg right here, and off of the leg right here, it was right at 382. That tells you had two things to say. Yeah, this might be it. And if you're trading a contract that's worth $232,000 and you only have to risk $200, take that all day long. And folks, I know this is the sixth month, 11th day of the month, but you got to look outside because Santa is on the rooftop. I mean, he is on the rooftop. Let's take a look at this. This is the Treasury bonds, folks. This is where we remember how bearish, well, it doesn't make any difference. Let's take a look here at the daily. Okay, we had this move here. We were getting ready to see this market breakdown. Remember, let's review. You see how it doesn't make the ABCD here in the Treasury bonds? Now, the two units, there's a Treasury bond and a Treasury note. The note is the more important one because the notes are 6 times the volume of the Treasury bonds because this is interest rates, car loans, credit card loans, all that stuff comes from that level. Now, if we looked at what happened with the TY, you'll be able to see it in just a second here. We were right on the money with that. There it is right here. Put the daily up and you'll see that it made a absolute perfect ABCD. There it is right there at 110.85. Okay, now we had the big move down just like you had on these other times when they had these reports coming out. This was quite large. Stopped at the 50%. Got a few buyers coming in. But let's take a look at these bonds. Okay, now we're going to go to the hourly chart and you'll be able to see it. There is what we're looking at right here. All right, now if we get there, and we're not very far away. We're only 10 pips away, and that is right here at 117.24. That's the sell. That's your 382 off of that high. Okay, it would also be an A, B, C, D. There's the X, and there's the A, and there's the B, there's the C, and there's the D right there. So that's what you're looking for. Have your order setting in there at 117. 22, 23, 24, put your stop above 118. And if it's right, this is a dead cat bounce, folks. And I mean, I don't have anything against cats, but this is not very, very bullish action. It could, maybe it explodes through here and you get stopped out, but, hey, that's trading. That happens to everybody at all times, so there's not anything you can do about that. You just put on the next trade and, ride it to the best of your ability. That's all you can possibly do. Okay, now I just wanted to cover that part in here. Someone asked to take a look here about that with that NASDAQ again, and I've already taken it off the board here. Let's get it up here again. I don't, it's so herky-jerky. In fact, I'll do the NASDAQ again, and because we're really close to new highs. I mean, we're within you can see all these highs right up in here. We're within a heartbeat of it. We were looking at a hourly chart, I believe. Yeah. There's your hourly chart. There's your high. See, we're only 20 points away. I mean, if it can go 125 like this, it can make another 20 points without any trouble at all. Okay, that's pretty much what we're paying attention to here with that. But I don't trade it. I mean, like I said, I don't trade it hardly at all, and I can live without it, and it can live without me. Now let's take a look at the Russell because I haven't looked at that today. Again, I do most of my operations in the S&P. And the Dow Jones, mainly from history, folks. That's basically it. Here's the Russell. We're going to get that up on a 60-minute. And you can see here that we made a double bottom here. It looks like almost exactly. We might have taken the bottom out. Yeah, we took it out by, let's check and see. The low was 20.05, and this one was 20.05. It was off, made a lower low by 10 cents. But we've had a little rally here today. Let's move it up and see where we are. Since that high was made early this morning, Boy, it didn't rally much. I think we're sitting right at the 50% right now, as I recall. Yeah, we're right there right now at the 50% level. So anyway, that's what we're watching here with the Russell. Let's get on to the currencies, because the currencies have made some really big moves in here. And we have this all related to this treasury bond stuff too. So let's get over here, and we'll start out here with the euro, because this is the one that we've been very, very bearish on for a whole lot of different reasons. This is going back to the high. This is where, you'll remember the daily here. This was right on June 3rd. We were making the ABCD pattern right here, multiple ABCD, ABCD. The last one, your extension went right up here to 109 and change, and then it stayed that way until the report. Look at this. All it did is it broke really hard, and then we'll see. Just draw it in so you can see it right away, I believe. All we did after that high was made is we just spent 2 full days. Oh, shucks. I'll try it another way. I'll do it this way and get rid of this. All we did during those 2 days was make a 78% retracement. Get it down here so we can see it right here. See, there was your 78. There was a report when the Fed came out and said, sell the euro. Boom, down it came, and you can see it's been going down for quite a bit with no rally in sight. At least with the bonds, we've had a quarter point rally, which is something quite exciting anyway. All right, we got that one out of the way. Now let's take a look at the U.S. dollar index. As if you listen to the or read the newsletter that we do each week, and John Jameson was kind enough to write the one this past week, and you talk about somebody who was really bullish the U.S. dollar. It was John Jameson, and we said that is what usually happens, and you can see here we have this big run-up. There's your ABCDs on the downside, but we'll look at this on the daily, because that gives you a really clear shot. Look at this. There it is right there. There's your low. There was your 382. But here's what we were watching. Remember? There's your A, B, C, D. And just get rid of these other ones in here. It's amazing how these A, B, C, Ds work, but people just don't look at them. I wonder why. There's your A, B, C, D, and where did it stop? Right there on the low. Now, I wonder what that could be. We're going to go back here, and we're going to see what our low was way back here. And I can see from looking at a lot of charts, it's going to be just about spot on 50%. It's not 382. And it is almost exactly. There it is right now, and there's the big rally we had. This is a rally like this one, folks. So pay attention. This euro's going lower, and some of the others are too. But we have to pay a few bills here, and then we'll be back, and we will look at a couple of other things in the foreign currency markets. So stay with us. 877-927-6648.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're going to look at a couple currencies right now. This is the British pound. This is the going back along. This is an hourly chart going back a month or so. But let's just blow it up, and you can see where we are right now. There was our high up here. You remember on the daily chart, there was a big Gartley up there at the 128 level. You know, it never went there. There was a sell point right here at the 128. The high was 128.20. It didn't go anywhere. Of course, it backed off $600. You know, basically, we're still short that because it never got stopped out. We were risking 60 handles and only went 20 handles against us. Now it's starting to move, but you can see this little action that we have now. If we go down to a smaller time frame, that's what we're going to do right now. You can see there was our high that we made just the other day when the Fed came out, and the rally back so far has been right at the 50%. There it stopped at the 382, and then it stopped at the 50%. That's where it is now. We got some lower highs in here. So this is still bearish as long as we don't get it above this. But if we do get above this, it'll be making an ABCD up to this higher spot right up in here. Now, currencies, folks, these markets are so big, even the Fed doesn't mess with them. Believe me, because the U.S. dollar is more out there. There's a lot of them out there. They've printed over the years, if you already know. But anyway, that's what we're watching here in the dollar British pound. So let's move this out of the way here, and we'll get up to the next one, and we'll see where we are. Hold on a second. Where are we here? Okay, let's get the next one up here, which is the Japanese yen. This is the big one that, if it ever surprises anybody, it's going to be a big deal. So let's get it up here. This is one that was a carry trade for thousands of years, but now it's run into a little bit of problem here. This is the longer-term chart. Going to bring it over here. Here's where we had that first one up here. Remember, that was the big expansion number way back here. If you'll remember, we said this looks like a good sale up in here. There was the 382 retracement right there. There was your ABCD. This was right during trading, folks, on that day, as I recall, because we were showing the folks that, look, this has got a really good chance. Now, we've gone above the ABCD here, and we really haven't gone down much, so there's nothing bearish about this chart at all. Let's just look at it on the daily basis, and you'll probably see the same thing. Yeah, see, it's just up in the same area. We've gone 1, 2, 3, 4, 5, 6 days, have not taken that high out, but there's a couple of things that say we could. Let me show you the first one. Right here is ABCD right there, and that says we should get up here to 98.50, and then we got another one right behind it, and that should take us up to 98.50, 98.60. Boy, that's an amazing number, isn't it? Let's just alert this like this and like this. That's why I put these alerts in, so that when it gets there, I can decide whether I want to be a buyer or a seller. And then I want to find out what is the relationship from this high to this low. Gee whiz. I think you ought to put an order setting in here at 98.44 because you don't have to risk much at that point, because if you get above it, it's wrong. That's it. It's not how much money you make, folks. It's how much money you don't lose, and that's the real key to looking at this. Now, another one related. Let's get this one, the British pound, out of the way here. Okay, get that out of the way. And where are we at on the other one here? Hold on here. Come on. All right, let's get the Australian dollar. And that's right up here at the top, I believe. Yeah, this one's related to agriculture somewhat. So, and it's been under a great deal of pressure also. So here's where we are. We got this big crop report coming here on Friday, so that'll be affected some of these things, but mostly it'll be grain related, but these will be related to the grain report. So the last high we made back here, from there to there, you can see we came almost, we missed the 382 by about 6 or 7 pips. So that hasn't quite got there yet, but you might want to look at that if it gets there. 60, that's only 15 pips, so that's hardly worth the time. Forget that one. That's you got to have volatility, folks, or you can't make any money, and that's the key to this business is making money, correct? I mean, that's what we're supposed to be doing anyway. Let's take 1 second here and take a look at one of my all-time favorites, and this is the one that I think this will lead you to the promised land, folks, if we can get it done correctly. And here's where we are right now. There was the ABCD yesterday. I sold that one. And there was perfect ABCD right there. Then we've come down, and now we're making multiple ABCDs coming in here. That's why you've got to watch it for tomorrow and then also for Friday, because this is going to be 2 days action. All right. And if you look at the soybeans from this high to this low to this high, says we're going to go at least another, well, that's nothing. That's only a couple cents. That's only 2 cents lower than where it is right now. So let's look at it on the hourly, because I like this longer term for sure. Oh, we're getting ready to make a major low here. There's what we want to see. There's our big low right down here. Oh, this is what we want to see. 1147. This thing here measures 1148. So we're going to make a new low. Probably into the report, or maybe even lower. Let's get the daily out so we can see it even bigger. There's that big double bottom right in here. Okay, now there's your 78% level right there. It's already marked. There it is. So that's the one you want to watch. It's only a nickel away, and believe me, with all day today or the rest of the day today and tomorrow, it's going to be. This is highly suspecting that we are going to go down and probably either stop exactly right here with a bullish report, or it's going to go down and clean out everybody down in here, and then you have to look for a 1.27 expansion. But we're going to be watching this one, because this folks, been doing this since just started trading grains in 62, not 1862, 1962. Corn was trading for $1.25. Had a weekly range of $1.25 to $1.30. Nothing. Right? Anyway, margin on it was only $200, so you could trade it. So you're a college student, you can trade it for $200. If you make $50, remember the minimum wage was only 75 cents when I was in college. I went to school with Methuselah. Anyway, this is what we're watching here. I really think that we're going to take this low out without too much trouble, and then we're going to find out what it's going to be worth here. We got all kinds of stops in here. Little rally here, stops right at the 382. Going to have some fun here on Friday, folks. I'm really looking forward to that, because I enjoy the day trading part, but we'll keep our eyes on what else is going on here with some of these others. Okay, I think those are the main ones we're paying attention to here. So that's, I think we got 1 minute to go. If you have any questions, and Al tells me right now that the tote board is lit up. We need to look at wheat, because I missed a beauty in wheat today, folks. I meant to show you that. This was just, I had so much going on that I just couldn't get out of my way. And here it is right here. Here's December wheat. Looks like it's going down forever, right? Until you put the daily chart up, and look at this. There's your daily chart right there. And all we're going to do now is we're going to get rid of all this stuff right here to see where the daily stopped. Okay, now we're going to take this low right here, and we're going to measure it from this low to the high right there. And it made a lower low than yesterday by 1 cent, and it's rallied 20 cents, folks. So this tells us that wheat is probably bottoming already. Let's take a break here. 877-927-6648. And we will be right back with a few words from our sponsor.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we just made new highs in the NASDAQ, reaching that objective we were looking at up here. It's within about 10 points of doing it. We got the S&P rallying up here at 53.66. Even the Dow Jones is rallying a little bit. So it's a big party going on with the NASDAQ today. Hold on a second. I got to make sure that, oh dear, I got the wrong limit in there. Hold on a second. It's making so much noise. It'll only take me a second to fix it here. Okay, it's all done here. I turned it off. But we have made new highs now in the NASDAQ, and we're a little farther away in the S&P and stuff, but it's still early in the game here. I hope you guys can join me here on Friday. We're going to be trading from 9 until 12. This will be our 9th one over the past 4 years, and it's always a lot of fun. And we've been fortunate. Trading gods have been on our side, at least for a little while anyway, during that time, and we've made some money. And that's what we try to do. I do a tiny bit of teaching, but mainly it's there showing you those patterns that we're looking at, much like this one we're waiting for here in the Dow, the Treasury bonds at 117.24, 23, 22, somewhere in that ballpark with about a 16-point stop. 16 points is basically $500. And so that's the one that we'll be watching very, very closely, okay? So that's pretty much what we're looking at here today. So tomorrow's guest is going to be Stan Harley. On Thursday, we're going to have Jeff Huge of Alpha Insights. And then on Friday, we're going to have that all-day session from, well, 9, for me it's all day, 9 to 12. And I don't know whether I'll have enough energy left to do the secondary part of that. We'll have to wait and see. But that's what we're paying attention to here so far today. Okay? So that's it. And may God bless, and we'll see you on the flip side tomorrow.